Okay, so welcome to this exciting video where I'm going to explain to you the fair value gap. So what you need to know is the fair value gap is part of the ICT market analysis. So I'm just going to break it down for you. But before we jump right into it, please take a minute to subscribe to this channel so that you don't miss on any important information that I post. You can also find my channels on YouTube, TikTok, and other platforms that I will put in the description box below. So without wasting much of your time, let's jump right into it. So the fair value gap. So the fair value gap is technically a price movement that is too rapid for the market to cope up, right? So it's always a point where the market wants to retest once or twice before it continues going in its direction. So in the technical analysis, we can clearly identify the fair value gap at a lot of points. Like for example here, right? As you can see, this candle was a very big candle. So this shows that the market was in a strong bullish movement, right? But then what causes the strong bullish movement? Of course, we might not know it, but then it creates an imbalance that is always a point where it needs to retest once or twice before it continues in its direction, right? So let me break it down for you. So I'm going to start with a sketch of this fair value gap so that you can clearly understand the imbalance zone that is left by the strong move. So the first thing, another thing that you need to note is it forms because of the market that moves too fast without balanced trading, right? And also price often revisits that area to rebalance, right? So we are saying, for example, at this point, as you can see, the market moved from this point up to this point. This can actually happen in less than a minute. Of course, we are in the 1 hour time frame, but then this can happen in a minute, right? So we are saying the market always feels obliged to come back to this point to retest so that it can rebalance that point. So how do we trade this fair value gap? So we have to wait for the price to fill the gap and confirm the structure, right? So this strategy works based in one hour time frame, the 4 hour time frame, and other long time frames. So now let me explain further how to identify this fair value gap. So the fair value gap, let me take a screenshot so that this can be illustrated a little bit clearer. So as you can see, let's say we are in a bullish movement like this, right? And then the market forms a candle, a big candle. Let's draw a candle here, right? So let's assume that this candle is the biggest candle in the chart, right? And then the market continues, another candle starts here, opens here, going up, right? And then it forms a wick, and then another wick, and then the market continues upwards, right? So what we need to know is that the market has now created a fair value gap from this point. So it means from this point, after the market forms the fair value gap, it is now obliged to come back to that point to retest. So the fair value gap is generally the distance between the third candle and the first candle that is in considering the big candle that is in between. So we are saying if we have another candle at this point right here and it has a wick up to this point, so we are saying the fair value gap is generally this point, right? It's generally this point. So this point becomes the point of imbalance, and the market is always obliged to come back to this point and then retest it. So this is where we come in, right? This is where we we determine whether the market is going to go up or it is going to go down. So I'm now going to illustrate this in a live chart so that you can clearly see where I identified my fair value gaps, right? So let's just discuss this, right? So back to our chart. As you can see, the market was in an uptrend like this. From this point, it was forming higher highs and higher lows, higher highs and higher lows, and then all these points were points of break-off structures, right? So these were all break-off structures, and the market continued going up, and then there was a little bit of a change of character, but it wasn't. It was just a fake out, and then the market continued going up, creating higher highs, higher lows, higher highs, higher lows, and then the market continued going up. But how can we utilize all this? This is where the fair value gap comes in. So we are going to use this candle, this big candle, as our fair value gap analysis candle. So as you can see, this candle is a big candle, right? This candle came after this very small candle, right? Let me zoom in so that you can clearly see, right? So as you can see, we are now going to draw a line that is marking this fair value gap. So we are saying from this point, right, from the low of the third candle to the high of the first candle, this is where we are going to. So we are saying our fair value gap is going to stretch from this point, from these 2 points. So we can say our fair value gap is going to go from these points. So let me illustrate it further. Right, as you can see, this is going to be our fair value gap, right? You can clearly see that the market, let me just adjust this so that you can clearly see, right? Just forgive me, let me change the properties of this so that it can have a better color. Let's put a better color. Right, as you can see right here, you can clearly see that the market created a new high at this point, and then it came back to retest this fair value gap point. So you can clearly see that this pattern was formed just to balance the imbalance that was formed by this big candle. This was an impulsive move, right? So the market had to come back to rebalance this point, and then it continued going up. So you can clearly place your buy order here, and then you can set your TP just above this high, because we know that the market is in an uptrend. So it is eventually going to break the structure at this point. As you can see, this candle broke the structure going up, and then this is where you place your order, and then the market continues going up. So you enter just after the close of this candle. This is where you enter, and then as you can see, the market went up. And then another example that we can use, let's look for another example. As you can see in this very chart, we can see that the market formed another fair value gap at this point. As you can see, this is a very big candle, as you can see this one, and also this one is a big candle. We can actually say our fair value gap is right here, and also here we also have another fair value gap. But then how do you determine that this fair value gap is going to be stronger than the other? Well, you can identify the areas of confluence, like for example the area of support and the area of resistance that is just near these areas. So let's just zoom out and see if we can find another area of support. And unfortunately at this point there was no area of support, so we can just use any of these fair value gaps. They can just work just as fine. So let's put another fair value gap here so that you can see, you can understand. So as you can see, our fair value gap point was formed right here. right? And then the market went up, right? And then formed a new high, right? And then it went down, and then it created this low, right? But then this low did not touch our fair value gap, so we can never use this as a confirmation of a buy. However, the market went back up again. It failed to break the new high that was created before, and then came back again. But this time it then touched the fair value gap and then went up. So we can actually enter at this point, but then this point is risky. You might not have enough confirmation that the market is going to stay since it closed at this point. So you can actually wait for it. The fair value gap will be valid for as long as the market did not close in between inside this fair value gap. So the market went up again, and then it came back to retest, to rebalance the imbalance that was formed by this candle at this point. So this is where you enter your trade, and then you just set your take profit just slightly below here, and then you can set your stop loss just slightly below here, below the fair value gap. Or you can actually set it at the close of this candle, right? Not the high, just the close, right? And then you set your take profit according to how much you want, but then usually you can just put it at the new high, at the high that was just before the fair value gap here, right? So you can actually put it at this point. As you can see, the take profit was hit effortlessly. So this is all I had on the fair value gap. So let me know what you think in the comment section below. Please, you can also suggest any other topic that you want me to explain. I'll be more than happy to explain it to you. Don't forget to subscribe, hit the notification bell so you don't miss on any important update that I'm going to post. See you in the next video.